Morning traders. What an interesting night. Now, when I woke up this morning, because I'm doing the taking over from the US session, right, at my desk in work, and I saw a few things happening in the market, and I was like, what is happening here? We had the nice rally in the US stocks. We had US yields shoot higher to 2.5. And data ostensibly from nearly every part of the US was coming in strong. Most importantly, the CPI was strong, right? So this is what allows the Fed to raise rates. Also, why the market shot up. Dollar yen tested 115. But then by the end of the US session, we started to see a little bit of some pretty negative price action, and it was becoming a bit of a US dollar reversal. But the yields themselves weren't really falling back, and stocks weren't falling back. So it was like the US dollar alone was doing this. Now this is pretty weird sort of price action. Now one of the things is either wrong, right? Either the stocks are going to come back with the dollar yen and the yields, or the US dollar rally sell-off that you're seeing here isn't can't last more than a day or two. Right? It's just a bit of a positional thing, but it's a positional squeeze. But it's definitely noticeable what happened last night, and the sort of thing which caught me off guard today in terms of why is it happening, when will it stop, and is this the start of something bigger? Now we talked yesterday about not buying dollar yen at the 114. The main reason to not buy the dollar yen yesterday wasn't so much for this, but that was always potential. It's we only had 40 pips left towards that 115 level where things got a little bit skittish, but to expect this was way more than you would, given that stocks remain strong. I was expecting stocks to give back. Now stocks haven't given back, so it's like this is a bit of a brain noggin scratcher, right? I'm like, I don't even know how to read this price action here. I mean, it's definitely negative US dollar, right? That's straight up. This is not what you want to see at all as a bull, and I'm a bull in US dollar. And so I'm really standing back here. I haven't got any trades open at the moment. I'm really standing back here and wondering whether we've got ourselves, the beginning of etching out a range. So that 112 to 115 level in the dollar yen. And dollar yen is pretty much the most important pair to be trying to develop that range in. Or whether we're going to be bought back up and stocks are going to remain strong and we're going to get back past 115 in coming days. It is a little bit of a riddle here, and so there's no reason to commit money when the market's acting a little bit weird, and that's what it's doing. It's not following the normal correlations. It's a vicious reversal, and it's a sort of reversal that I don't like to sort of test. I want to see, watch, and wait. And sometimes in the market you do that, right? You don't. For me anyway, in the way I trade, I mean, this is not an opportunity, this is dangerous. The market tested 115, it's coming back. The market tested 105 and it's coming back quick, squeezing almost, right? And it's on little news, so it's one of those where you're like, I don't really want to test it. I'm just going to sit and watch it. Now the Aussie, he took advantage of that US dollar weakness to break 77, and we had ourselves a little bit of data out today that was pretty weak. It was mixed, but it for me that was weak data. What we had was the Australian employment numbers come out, and it showed a staggering drop in full-time employment in Australia. A lot of it in New South Wales, the main state here in Australia. While the headline number was okay and unemployment rate dropped, that full-time employment number was pretty bad, and we'll look into that in a sec. Oh, UJ was overpriced. That's a bit of a contention. UJ was overpriced. I mean, with stock markets at all-time highs and going up for the 7th day, I don't think UJ was overpriced, but it was struggling to play catch-up to where it was, say, back in the day, which would have been 117 on similar sort of price action. But the sort of the range-bound view of the market, I think, is a pretty solid view that will begin to show its face. There's reasons to be long US dollar, there's reasons to be weak US dollar, but yeah, Morphs, I understand your sort of view there, that perhaps there was a little bit people getting carried away themselves. It was only a few days ago that we were testing 111.50, right? But I believe that, right? I believe the reversal. I was just not going to play with it above 114. Now I don't want to play it down here, and this is ostensibly where you want to buy. Right? This is where, you know, sort of, if you're a buyer of dollar yen, you wait for the market to reject, come back and buy. I'm just going to leave this one alone. You know, and if you're a seller of the euro, this is perfect, right? This is what you wanted. Nice little rally up here. Euro pound, you want a nice little rally. Now, I mean, we can jump across to the euro pound and have a look at it again, because the euro pound is one of those trades that when the euro rallies, it gives you a nice little bounce, and we've got a nice little bounce, but it's not what I want to play. Look, I don't mind it. Let's sell it. Let's sell it. I mean, I'm just selling every rally is the main thing. One minute. I have to take that thing. It's all good. Just another sales call, not my broker in head office. So got rid of them pretty quick. So yeah, I've been selling every rally of the pound, euro pound. I might just sell a tiny bit. This is a quarter size, right? So that's about as most you're going to get out of me in the current market. Well, I don't have a good grasp of what's happening here. You know, and I don't want to play probability game when things are a bit weird. So I know that usually I come out here tell you straight up, you know, this is what's happening, guys. This is the opportunity to buy that dollar yen dip. Just this time, I'm going to leave it alone. I don't want to overhype you. The market's acting a little weird. Even the Aussie's acting a little weird up here. The lack of reaction today, either way, was noticeable, and so no need to try to be a hero. It's pretty strong. It's pretty strong though. And unless this is a sort of false US dollar sell-off, I think the Aussie is going to be testing 77.50. But the Aussie now is getting really close to that big resistance from last year, and there's no reason to be playing the long side just yet. I know a lot of people selling it up here. Jeez. Alright, I mean, you're just hoping that this market would run out of steam when commodities and, you know, iron ore and copper have gained so much in the last few months, and every other country's got issues like Japan, Euro, and the US have got some mixed issues. The Aussie is almost standing out as this beacon of solidarity, and our RBA has gone pretty neutral and from neutral, you know, the next move is higher in our rates, and the commodity backdrop and China backdrop is helping. So it's hard to be ultra aggressive on the Aussie here, especially post Trump making friends with China. No reason to be too bullish. This little pound is constructive. I mean, if you are going to play against the US dollar here, I don't mind being in the long pound. That's one trade which I think is got a lot of risk reward anyway, right? If you paired back and the buyers want to take back control. And so if I was going to be buying against the US dollar, I'd be buying that. For the dollar yen is the way I'd be playing US dollar strength. It's just not the high probability trades to look for here. The rejection was too quick, too aggressive, and it probably has more steam to go, catching the market there. The sound of my microphone is pretty crazy, is it? it the outside or is it? I'll listen to it again later. Yeah, I'm not, I don't know 100% sure. Yeah, so gold was one of the ones that we viciously reversed. Speaking of gold stuff. And New Zealand dollar, played, if not more aggressively than the Aussie. So we always wondered, what's going to go wrong with this Kiwi dollar if the Aussie's reversing. Oh shit, this is aggressive. I hadn't watched the gold for a while. Yeah, something's up, guys. I don't want to play with the US dollar here. That's some sharp moves. I wonder if they're worried about Trump. And they just haven't, there's a delayed reaction in stocks. And there's a lot of Trump's might be pulled down with a few of his Trump's campaign team. But you would think stocks would have fallen on that. But so far they haven't at all. So the Kiwi dollar, it sort of played catch up with the Aussie, and had a really good day yesterday. It's squeezing higher pretty quickly too. So yeah, Kiwi to the top side makes a lot of sense. Here's one I was looking to buy the dips on. Didn't catch this one though. But yeah, no, Aussie Kiwi has been stopped in its tracks. So this is a dangerous one for you, Dave. You've seen the market stall at this 107.50, 107 level before. Anytime the market rolls over with the Aussie Kiwi, it could start, grinding lower again. You don't like this sort of price action. You want a reason for the Kiwi to be weak. We haven't got any news out. We haven't got any reason for it to be beginning, and the Aussie data didn't help you. So perhaps we have a little bit of an issue here with the Aussie. The Aussie Kiwi on a pullback towards 105. I may have a look at it on the long side. For a long time we've been talking about buying Aussie Kiwi fundamentally. This is the first sort of aggressive reaction we've seen, supporting that for a while. If we do get a pullback, sorry, maybe not 105, 107.30, 105.70, sorry, I would perhaps look to be buying here. Stop just underneath 105, risking that to try and get back to 110. But we'll look at that if we get a bit lower. It's still too high for my liking. That would require Aussie to break 77.50 though. In that scenario, we're looking for Aussie to go to 80 cents, and that in itself is a pretty big call in the market. But it's becoming more and more likely. So yeah, let's have a look at a bit of the research, see if we can glean any insight here from the banks. From what I read earlier, not many had a clue, why the US dollar reversed so sharply. I mean, it's definitely bigger than a normal move, and perhaps we are being squeezed here, but squeezes can begin bigger things. First off, we'll look at the Aussie employment numbers. So, yeah, that's one way to put it. Low quality employment beat. Hardline employment came in above expectations, rising 13.5, but the internals are really bad. Full-time employment fell 44. Part-time rised, obviously raised 57. They're concerned about New South Wales. I think the RBA will turn negative at some point. Alright, let's find out where in Australia it's actually going well. This is good for us Aussie traders. I mean, I'm interested in this from an Aussie perspective. I know this is not really what you want to read. So Australian bond market, which is a pretty volatile bond market too, seems to be pricing in binary outcomes. One is possible the US President Trump succeeds in reflating the economy with his fiscal package, so this is the reflation trade, and that's going to help commodity prices in Australia because of, and the RBA, if we get inflation over here, we're going to start raising rates. As a possibility outcome, Trump stimulus fails, all asset bubble bursts, widespread deflation, rotation back into safe haven assets. Yeah, I mean that's definitely possible too. This rally here this is now 7 days in a row. I've rarely seen 8. Guys. This is getting a little bit silly in the stock market. And so it doesn't take much to turn a market back down to testing even 20,000. That's a 600-point drop, and it's enough to get some big moves against the US dollar via the dollar yen safe haven. Let's have a look. Let's have a look at ING, see if they've got anything for us. Why is the US dollar not stronger? Okay, they're literally asking that question in their first statement. Why aren't new highs in US short-term rates helping the dollar more? Seems to be 2 factors holding the dollar back. First, strong demand for carry trade strategies. That's Aussie dollar, Kiwi dollar. Low volatility. US political risk premium. Reopen a battle with intelligence. Yeah, I mean, this could be it, right? Trump went pretty crazy on Twitter yesterday. Going after the FBI and the CIA for leaking to papers. I don't know why stocks responded so strong though. Sometimes you do get that 2 different stories played in the 2 different markets, but it does seem surprising. One of them has to play catch up with the other. Dollar yen's reversal signifies, it's either a really good buy on the dip here or the stocks are going to turn tonight. Just 1 second, guys. I think at the height of the expectation last night, US rate hike chances jumped to 40% in March. They pulled back a little bit now, but they, that was some pretty touch and go. That's when dollar yen was testing 115. Yeah, it is actually quite a loud, surprisingly loud. If you go from the city into the country. There's just so many noises that you don't hear. It's ridiculously silent. So tonight there is ECB minutes, US unemployment numbers, unemployment claims and US housing starts, building permits. They're the main things leading into the retail sales for New Zealand. That's a pretty volatile number actually. So that could be for us Aussie Kiwi traders. That could be the next big thing for us to be watching tomorrow morning. But tonight, don't expect anything from the ECB. I can't remember the last time ECB minutes did something, and it was a pretty non-eventful meeting. Yeah, the market's surprisingly mute. Even the updates here are surprisingly mute on the reversal. Usually someone will step out and try to make a claim as to what happened. I understood, sort of that Trump risk, right? But really, when you don't have that reversal coming from the stock market, it's hard to believe that's really taken hold. RBC. So 44% it got to yesterday. At the height of it. It definitely pulled back since then. Despite the rationing of the US Fed rate expectations, US longs bailed. The DXY is down as much as 0.8%. Okay, good pickback, but why? Golly gosh. It wasn't just the commodity currencies that led that rally. It was pretty strong on the euro, very strong on the dollar yen pullback, so that's not the case either. Yeah, so every now and again we get this happening, right? You get this sort of reaction in the market that's hard to explain and hard to read, and sort of defies your expectation for that day. I would be looking to be very careful in the next 24 hours, given that market's move. Keep an eye on the stock market. If you start to see stock markets falling and the US dollar selling extend, just be wary that that's probably it's got a lot of room to move, right? 112, we're still 160 pips away on dollar yen. 107 on the euro is still 60 points higher. And if the pound can get back above its previous highs from last week at 125.50, 125.80, it's got open air to 127, and this chart could look very different tomorrow. And support on dollar yen breaks, it would look very different tomorrow, and it could lead to more and more sort of selling. In terms of what happened in the Nikkei was also very aggressive on the downside today. That's a little bit of a warning too. Although the Nikkei doesn't really run with many other pairs lately, you don't want to ignore that sort of reversal. And it's 7 days in a row, huge rallies in the stocks in the US. Something has to give, right? If it can somehow shrug off and do an 8th day, I'd just be super impressed that it could do that. But perhaps the currency markets are in charge really, and they're proving to show which the next move here in the stock market is. Not too much happening in the DAX. We've created a little bit of interest though in our Euro Aussie traders. It's the first little bit of buying we've seen in a while, right? We haven't seen some constructive price action like that for a long time. So be warned. This is stocks fall, Euro Aussie will rally, and we're rallying off extreme levels. And the market can easily go back to 140, 144. We're talking about really big levels that the market's finding support at and reversing. And it's a bit of a question of what is happening next in the stocks. 2 or 3 days of selling here. Aussie back below 77, back towards 76. euro back towards 107, 108, then you're looking at 140 quite quickly. And that's the way Aussie moves, very aggressive to the downside when it turns. So let's be careful today, guys. More than usual. I'm not at King's Cross. My wife works in King's Cross, but King's Cross is dead now in Sydney. It's not the place it used to be, that's for sure. We have lockout laws in Sydney, Australia, so they ban people from entering establishments after 1:30, I believe it was, which really cut the nightlife in half. Alright guys, everyone have a good weekend. I don't stream on Fridays at the moment, apart from NFPs. I will be back on Monday at 9 GMT. We'll review what happened, what was this the beginning of? Was this just a little bit of a short-term squeeze on the US dollar longs? Or was it the start of something bigger? I'm genuinely interested, and I really don't have too strong a view here on what's about to happen next. I'm very surprised that stocks in the US have rallied relentlessly without pullback. So I think there's a bit of danger here that the pullback begins today, and that you will see dollar yen selling accelerate, euro buying. That helps us buy the pound. If I wasn't do any trade at all, it'd be buying pound against the US. Apart from the euro pound short that we got going, I'll be buying the pound against the US. Alright. Good luck, guys.